TGIF Warriors. Hope everyone had a decent week. Give me a Y if you had a good week. Plenty of decent ideas coming out of ForexAnalytix like usual. How are you guys? Hi, Patrick. Good. I'm glad you did. Hiya, Dan. Nice to see you. Okay, so let's just go through a quick synopsis of what happened yesterday during the ECB. So yesterday during the press conference, I pointed out we had this divergence and we had this pop that lasted, I think, maybe just over an hour. I don't think the 4 hour stuck. No, the 4 hour did stick here. And then I heard that once options expired, that's when they took it down. All right. So it was right for 4 hours and then negated the whole thing. And I'm sure we're going to have some type of breakdown talk. But if I extend this line out, it's very possible. Yeah, we're getting very close to this line that I've had here for a long time. But if you recall, while that was happening, I said that EG, Euro Pound, was not making a new low. And if you guys were here for the interview that I did with Lydia, and she was going over everything cable, I talked about the potential of a right shoulder in Euro Pound. And yesterday I said, you know, if you didn't want to try the long side of the Euro, the lower beta trade was get long Euro Pound, which was on this cable. And although Euro made a new low, we did not take out these lows, and it's certainly starting to look like a right shoulder developed. We still need to close over this 87.90-ish area, and if we do that, we're on our way to 89. So call it a lucky guess, but it was a market tell to me. Let me coach you. That when a market, normally EG would be making new lows with the Euro or prior to the Euro, and that wasn't happening yesterday. That's why I noticed it. So if you could see, if we break through, we stalled right at this 50-day on the daily, and we get through it, we could be up here at 89. Talked about it with Steve that the bears had their chance here on this breakdown. And maybe they had some hope for a few days that they were going to get bailed on their shorts, but now I think the squeeze is on. Give me a Y if you see it, remember it, understand it, because there still could be a lot left if we get through today's highs on a closing basis. Okay? All right, so this was a contrarian type trade. In fact, I brought it up with Lydia the other day when she was covering all the cable. The other thing I was talking about, I've been looking for a correction all week in Aussie Kiwi, and we started to get one yesterday, and it's fighting its way back. It still needs to take out this 106.70 level, but we're still well off the highs. And to me, this could still be a failing rally that we see here under 106.70, just arithmetically. And I'm bullish. You know, I'm looking to buy this market halfway back, okay, for another wave. But if we start taking out this 106.70 level, and it may be a decent top pick here, it's not a big risk. Risk the highs over 30, get out of the way. If it takes out 30, although it will diverge again on a lot of time frames. 4 hour wasn't that classic. It got to a little bit above 70 here, 73, but it was still lower than here. So we'll see in the next few days if we could get this correction. And I'm not bearish. This was just a reaction play looking for some type of fib retracement off this big move to the upside. Give me a Y if you're with me there as well. Okay, so yeah, everyone wants to top pick the dollar. We're almost at this line that I have had drawn in the yen for a long time. I think Steve has it too. It's up here around 110, and the Dixie has gotten to this line at 92. I don't have any divergences that I can say the dollar rally is over. We might be diverging here, but look at this reading. Too much momentum for me to fade it. And then just wrap it with the metals. While the euro was rallying yesterday, I said the metals were now responding to the dollar coming off a little bit. And they're trying to pop a little bit here today. But I'm trying to be patient and let the metals play out to the downside. In fact, I sent out a tweet last night. We had a gentleman with us from South Africa, Corn Smith, who talked about a deal happening in Korea while we were still talking about fire and fury. And when I was watching those images live from the DMZ, I thought about him. He was also a Euro bear, and I think this interview was over a month ago. And may want to listen to that interview. A great call by Corn Smith, a South African. Only 2 guys are licensed in FX, I remember from that interview, in South Africa, and he's one of them. So still a pretty negative week in all the metals. Still my contention, they're going to try and shake out people under 1,300, take their stops out, and then I have some confluence around 1288, 1290. I know a lot of guys are saying if we close under 1,300, and you have to be open to it, and just consider this a big rectangle from 1,300, call it 1,365 or so, you could be looking at 1250, 1240 in the gold. So that would probably be with the dollar index trading 94, 94 and a half. So Larry Kudlow's King Dollar reemerged and he went to China. You know, I believe we're going to have Jim Rickards with us next week. You know, you never know, but I'm really looking forward to it. I hope it happens. The author of Currency Wars, and my first question to Jim Rickards will be, Jim, about this currency war, who's winning? Okay, so with dollar strength coming in, I guess you could say right now the U.S. is losing or beginning to lose, while while we were winning and Europe was losing all of last year. So with all that being said, I want to thank everyone for their support, the thousands of people that have signed up for our webinars. You know, it's our mission to build up and edify traders every day. And I just wanted to point out that Corn Smith interview because I believe, although attendance isn't as strong during the interview period as it is with Blake and Steve doing analysis, that you guys should stick around or at least take the time at your leisure to watch these interviews, because one of the major purposes of bringing in other experts is for you, okay? Even though they could be competitors and would like your business, we're bringing them in so that you have some foresight. That's why I call it intelligence gathering. And that was just a great example, because if you took what Corn said to heart 6 weeks ago or so, you know, you were short euro. And, you know, that's something I want to point out, that I spend a lot of time looking for good people to bring in for you, okay? It's no huge advantage for us since we're in the subscription business, but the model was built for it to be an advantage for you, for our community, for FACE, for our subscribers, for people considering becoming part of our family, our trading family. So I don't know how you feel, Blake, but TGIF, I turned off my alarm and then fortunately woke up at 4:27 just in time to open the room. So
wow,
TGIF partner.
TGIF, good luck. You're lucky. If I would have not turned on my alarm this morning, I would not have waken up. I was my kid had a scrimmage last night, baseball game, until 9 p.m. Eastern, or 9 p.m. my time, which is midnight Eastern, and I don't know how I managed to get up this morning. It was it's hard.
Pure
But it
luck.
is.
You know, once you turn off the alarm, there's no guarantees. And you know, I have two. Okay, the first one, the opening bell, and if I want another 15 minutes, Blake, I'll go. You know, I have another one, but the second one I don't think went off. And I woke up, I looked at the clock, and you know, I went, oh, you know, the word.
Right. Sometimes that happens. Well, thank goodness it's Friday, and maybe you can leave it off for the next couple of days. So
yeah,
it's good news. So so
what do you think, bro, with what happened yesterday?
I mean, you guys know, I mean, this has been a pretty good week for me because I've been bullish the dollar and playing it as such. And I mean, although last night a little upset because I only had a small euro position. I had taken all my profits yesterday when we got to 121. So when we hit this, and the reason why is because this 121 level was the big breakout point from last August.
Right.
And then it broke higher in January. So that was a really key resistance, and then it was a pretty key support on the way down. I expected a bigger reaction from there. So I sold a little bit last night at 121.10, and then I had a bunch of orders lined up all through this here in case we bounced, and there's no bounce. Fortunately, I'm short the euro yen, so that's been working fine, but I'm a little upset that I got out of my euro position because then I had a take profit just below the market. And
so you probably faded that pop that we had before it fell apart yesterday.
Oh yeah, when it was at 122.05, I sold more. So I had with this rally during the ECB, I sold a little bit more, and I was pretty aggressively short yesterday. So
you know, you're not showing your charts right now.
I'm not.
No, you're showing the room.
Oh crap!
Bloomberg.
Oh shoot! I'm
getting some very cute cartoons from Ziggy.
Wait a second. Oh, you know what? What happened? Okay, this is 3. Okay, so when I woke up this morning, my monitors were all screwed up. My display, and I'm not too sure why. Because if you guys just give you guys like a view of what my desktop, this computer that my working trading desktop, this is what my desktop looks like, so you guys can have a kind of view of everything that I see.
This is Major Tom to ground control.
That's it right there. And so when I woke up this morning, let me make sure you guys can see what I'm saying. Okay, so when I woke up this morning, all my monitors, my screens were all screwed up, and I was like, you know, I didn't know why. So now everything's kind of, I had to reset everything. Obviously, I didn't reset it the way I was supposed to, but that's okay. Going back into what I was saying is that, yeah, I shorted more euro dollar here at 122.05, and I was very aggressive through here. You know, ironically, I was long the US dollar Swedish krona, and even though I only made this, let me take it over to an hourly. I traded it long, and I was long right here. Okay, from here, and I got out here. All right.
Yeah.
So I bought it here, and I got out here. I made more money in the Swedish krona than I did short the euro. That's how aggressive I was long the US dollar Swedish krona. Now, if you guys don't know why I was bullish the US dollar Swedish krona, is because I knew we were breaking out. And knowing that we were breaking out, it's like, okay, if I really want to play the dollar on the long side, which I did, shorting the euro, I wanted to be long the US dollar Swedish krona because I knew that was actually breaking big time. And we talked about it yesterday about this false breakdown, V-shaped recovery. It's getting up to the levels, not quite where I think it's going, but it's getting there. And I knew that one was the path of least resistance yesterday because of the Riksbank. The Riksbank or as Andrew in our chat room called it, the Risk Bank. It's the Risk Bank. They were really dovish yesterday. So I'm like, okay, well, if the dollar's really going to get going, it's going to go against the Swedish krona. So even though I didn't, from a price perspective, I made more in the euro as far as what the move was. The move was really in the euro yesterday. I ended up making more money slightly in the US dollar Swedish krona because I was very aggressive long this and I was very short the euro. So it's been great.
Are you surprised by the pound getting creamed? I don't know.
Yes,
what's behind it.
Well, it's GDP. GDP numbers were weak, revisions were weak, and I wasn't surprised necessarily because the pound. And if you use ForexAnalytix, and this is our old platform, our new platform's right here, but there's still some bugs that are being fixed with the new one. So if you guys don't have this and you're like, wow, I don't even have this platform, that's because it hasn't been released yet. So, and this is what we've been working on. Steve's probably been showing you. There's a few things that are still being fixed here, but if you were using ForexAnalytix yesterday on the pound, it said pound dollar finding resistance at the 140 level, which is key development today thus far. You'll see it. It'll be on the 1 hour, I think. Yeah, right here. We were challenging the underside of the trend line, hitting the resistance, and when we rejected that and rejected the 140 level and the underside of this trend line, to see it go back down is not surprising to me. Now, waking up this morning and seeing it where it's at and how far it's traveled, that was rather surprising to me. I didn't expect it to, but although if you looked at like the pound, like one of the pairs that I was following pretty actively was the pound Aussie, and I knew it was up against resistance here. I almost shorted it last night before I went off to these baseball games because I knew we were right. I mean, we were just knocking our head up against resistance. I'm like, I should short that and just put a stop above the high. I just didn't do it. But the pound New Zealand ascending wedge hit that top, and I was thinking the same thing that I was thinking with a pound Aussie. If you actually shorted the pound Aussie or the pound New Zealand, you got to look at it as a gift. That the GDP numbers were so weak, and I would be booking a little bit of profits and moving stops up to break even on anything that I had if it were me. But so it wasn't really surprising. What was most surprising to me is the euro pound, which was in process of really selling off because we had this triangle. You'll see this. It looked like this. I don't know why that disappeared. I must have deleted that yesterday. But we had this triangle, and then we rejected this trend line yesterday, and then we started moving lower. What was surprising to me is seeing it back where it's at. Now, here's I'm going to talk about the euro pound for a second, and this is going to illustrate how bearish the pound could get from here. This euro pound, if you look at it like this, and then you look at it like this, right? This is an inverted head and shoulder pattern, which, I mean, this could indeed break us higher. Now, am I bullish the euro? No, but could that tell you right there? Could that tell you how bearish the pound could become? I mean, if you take the pound and you break through this is the pound dollar. You break through this channel, right? This trend line support, and the pound trades. And you probably heard me yesterday. I said I know I explicitly said this yesterday, so you can go back and listen to the recording during this webinar yesterday. I said I wouldn't be surprised to see the pound down in the mid-30s, 130s. Well, we're already down at 137 and change. How about if we break through to 135? I mean, if we break through this dotted trend line here, pound dollar is going to really come under some pressure, and that could lead the euro pound to this inverted head and shoulder pattern breakout very easily. So I wouldn't be surprised to see the cable really come under more pressure from here, because remember, it's more about the dollar. So let's talk about the dollar for a second. Today we have advanced GDP numbers, okay, and yesterday we talked about the goods trade balance number coming in better than expected. Now, if you look at yesterday's data, here's the goods trade balance data, okay. This is what I was talking about yesterday. I said, look, we've gotten pounded here, and how about if the data improves? It's going to feed into GDP. Well, it did improve quite a bit. And now what we're faced with is advanced GDP today, okay? Advanced GDP, and how about if these numbers come in better than expected at like 2.5% or maybe even higher? If that GDP number comes in really strong, yes, the euro could be trading at 120, but where does that put the pound? You know, the pound dollar right now is down 147 pips. Could the pound dollar be down 220, 250 pips by the end of the day? You have a strong U.S. advanced GDP number, and then a weak UK GDP number, and we could be down quite aggressively today. You might think this is down pretty aggressively right now. It could be even worse. Now, and obviously we're going to see what those numbers are in about 8 minutes, but that's something that I'm obviously thinking about. Am I shorting the pound right now? No. Am I chasing it down here? No, I don't. I try not to chase. I'm like any other human being. I get caught chasing every once in a while, and then usually once I do it, I realize, oh Jesus, I can't believe I just had the FOMO, had the fear of missing out. I can't, I fall for that trap, even though I have t-shirts that actually say no FOMO on the back for ForexAnalytix, and some of you are receiving those in the mail this week actually, or maybe next week. Well, I sent them all out internationally, so it might actually be in 2 weeks. But you guys, some of you will be getting those t-shirts. Even though I know better to chase lower or to chase higher, sometimes I get caught doing it. But once I do it, I'm like, after I do it, I'm like, oh, that's such a big mistake. I know it's going to be a big mistake. So I'm not shorting the pound right now, but that doesn't mean that it can't drop from here. Now, one of the trades that I'm in right now is I'm short the euro yen. Now, the euro yen broke below this trend line, so it is a pattern in play for me. I am short, but let's talk about this for a second before I pass it over to Steve. And I don't know if Stelios is going to be here this morning. I think he is. Actually, I see him here. So let's talk about the euro yen really quick. No one wants to own euro dollars at this moment in time. The euro dollar has broken below the key 120.80. 120.90 level breakout, so breakdown point. So I think any rally in the euro is going to be faced with selling. Doesn't even if we bounce back to 121. If the GDP numbers come in line at 2% or maybe even slightly higher at 2.1%, we might see some dollar weakness. But if we see some dollar weakness, where is it going to come through more than likely? It's going to come through the dollar yen. The dollar yen has really been struggling the last couple of days. As the dollar has been rallying, the dollar yen has stalled here at 109.50. So I think that the dollar yen's upside is fairly limited, and if the number is weak, the dollar yen should come under pressure. If the dollar does weaken a little bit, I think any rally in the euro is going to be short-lived. So even if the euro bounces back above 121, it's going to sell off again. There's going to be people like me that want to sell the euro on any rally. So as far as the numbers go, if the data is not that great, let's say our GDP numbers come in, advanced GDP numbers come in at 2% or maybe 2.1%, even though I think the market's looking at a much better number. But if it's slightly disappointing, I think that the dollar yen's going to get sold, but the euro dollar has got very limited upside. So what does that mean? That means to me that the euro yen's going to come down and test the 38% retracement, which is right here. 38% retracement, which is right here at 131.75, and I think that's doable. So anyway, and even if it's a strong number, the euro dollar is probably going to drop, but the dollar yen has been very reluctant to rally. So therefore, I think the euro yen is going to be a great short for today. I am in a euro yen short. I am looking to add to my position, is basically what I'm saying. And so that's my plan for today. It is Friday. You got to be a little careful. Do I think the euro? Would I like to sell the euro before the end of the day? Actually, I would. If you look at the euro weekly chart and you look at this weekly candle, and I'm going to zoom in for you, that's a gross weekly candle. That is a serious breakdown. We would have to rally all the way back above 122 for me to second guess being short the euro right now. So in other words, any rally in the euro dollar, whether it's a 20, 30, 50 pip rally, I'm selling into any strength. So, and I'm kind of hoping the GDP number isn't that great, because I'm hoping the euro will bounce and give me an opportunity to sell into it, because this is an ugly candle. And like I said, we're going to have to get all the way back up here. We're going to have to get all the way back up here to reverse the course. That's 100 some odd pips away from where we're at. I doubt that's going to happen today. So what I'm trying to say here is there's a strong possibility this is going to be an ugly looking candle by the end of the week, by the time we close today. You know, even if we bounce a little bit and we cut off a little bit of this red candle, it's still going to be pretty ugly. So I'm hoping to sell it on rallies. And that's my plan for today. And that's what I'm thinking. And I hope that all made sense to you guys. So with that being said, I'm going to pass it over to Steve and Stelios, and back to you, Dale. So good morning, guys.
Have a great weekend, Blake.
Good morning, Blake.
Good morning, Steve. How are you?
I'm good. I'm good. How have you been? Besides tired.
I'm tired. You know, to add to my frustrations, on my wife's truck, the battery cables were loose, and so her truck died like 15 miles away from where my house is at. So I had to go run out there and fix that yesterday. So yesterday was a very, very busy afternoon, and I can't wait to collapse and take a nap today. So, and it's only 5 in the morning here. So
good thing that it's Friday though, right?
Yeah, that's exactly right. So guys, good luck today. Good luck with trading, and thanks everybody for your support all week. And Stelios, I hope you're having a great time in London. I don't know if he's here, but I heard he met up with I heard you met up with one of our ForexAnalytix traders, Dougie Mack.
Yes, I did. It was really good yesterday. We're enjoying our time here, and we're going back tomorrow. So it's been fun.
That's so cool when you get to meet one of our ForexAnalytix family members in person. That's awesome.
Absolutely. Really nice guy, too. So very happy about that.
Very cool. All right, guys. Hey, happy Friday. Thanks, Dale. Thank you, Steve. Thank you, Stelios. And thanks, everybody, for listening in.
See you later, Blake.
Bye, guys.
Okay. So as Blake said, we are expecting for the preliminary GDP numbers for first quarter. I think that's going to be quite important. Just before we get that print, which is in 1 minute from now, I need to show here that the dollar has now entered the DXY, the dollar index has entered now an area of multiple resistances. We're just probing above this long-term descending trend line. We're also probing above the 50% fib of the latest move lower. This is also the 23.6 of the move that started from the highs at the very, very beginning of 2017. And the 200 EMA is also here, as well as this ascending channel. So, I've already counted, what is it, like 5 areas of resistances. So at least a pullback, especially, if the GDP print helps with that, can happen. Let's see. US employment. Okay, GDP is stronger actually. 2.3.
2.3. Yes.
Versus 2.0 expected. So this is a good GDP print, and probably that's going to keep the dollar supported. The Euro USD is now testing the 50% fib of the last leg higher. The 200 daily moving average is not even, it's roughly 50 pips below where we currently are. We've already broken this triangle. We were looking at it last week. We said that, a break higher or a break lower should, find some continuation. Cable has really broken down, and the most important thing about the cable is that it has finally breached this ascending channels resistance. It was acting as support after we broke above it. We now seem to be breaking below it once again, and we are contesting these lows, which, if we finally close below them, this is going to be the first time that we actually see a major lower low in a very, very long time, and this is definitely going to signal a change of behavior for the pair, meaning that it's going to be sell on the rallies. Yesterday I was hoping for a bigger rebound. I was looking, as we had said on the chat room, to sell the cable at 141, but unfortunately the market never made it there. I have sold, though, some euro yen. I sold euro yen at 132.40, and I'm going to be adding at a break below 131.50. We were looking for this ascending wedge to break the downside. It seems to be happening, especially close below 131.50. I think is going to signal that continuation to the downside should be coming. RSI is also testing a support area as well, so I think this potentially looks very good. Now the gap has also broken to the downside, and I'm going to be interested in selling it once again. It has broken down from this ascending channel after it overthrew for a little bit. It managed to hold the 78.6. It's now testing, I think, a major level. This is horizontal support resistance area. A daily close below it is going to confirm that the gap is resuming lower for at least one more leg to the downside. So I think that today we might get confirmation about it as well. But on the other hand, I have to say that some short-term pullback for the dollar, despite having a strong GDP print, is not out of the question, because I can go ahead and show you, for example, how many of the pairs that have been under some intense selling pressure the past few days have now found important supports. For example, the Aussie USD is currently testing, today was earlier actually testing the 161.8 of the last move higher, given the fact that it has already been sold up from the 0.78 level down to the 0.7540 level. I think that a short-term rebound, for example, to retest this confluence of resistances before resuming lower is likely. Let's have a look at the USD NOK, USD SEK, USD CAD. You're going to see that most of them are testing resistance as well. I already showed you that the Euro USD is on the 50% fib. We already seen that the DXY has entered an area of multiple resistances. The USD CAD is currently testing the 61.8 of the last move lower. USD SEK has met our next target. We were looking, when we were down here, we were looking this as a bull flag. I actually was looking to buy this. I didn't get triggered, so unfortunately, this was a trade I was monitoring, but I never managed to catch. We were saying that a move higher should test this area. This area was enough to provide a short-term pullback, but once we broke above it, we came up and now retested the 127.2 of this move lower. It's also, if I zoom out, you can see how important of a resistance area this has been, dating back to 2015, right? So keep in mind that this area has the potential for at least producing some kind of a pullback. Once again, USD NOK, we were looking at it for quite some time. We had said that there are two scenarios here. One is breaking lower and resuming. The other one is breaking higher from this triangle, in which case a move towards the 61.8, which would also confluence with the parallel of this trend line, would be quite a possible scenario. But before we even reach that, we've already found another confluence of resistances. It's a 50% fib. It's also a horizontal support resistance area. So a short-term pullback from here is quite likely. So this move, I still stand by it. I think we can easily get back to that area. But a pullback first, before we actually do that, is not unlikely, right? So something like that might take place first. Okay, so I'm actively looking. If that happens, actually, I might be buying some USD NOK.
You've gone quiet, Steve.
For another move to the upside before actually. Can you hear me now?
Yes.
Okay, good. Okay, so until which point did you hear me, Dale?
I don't remember. You just went quiet.
Okay.
Yeah, I don't remember your last word before you went dead.
Which pair
But
was
it's the same issue that's been happening all week.
Yeah, I know. I know. I checked. I checked.
Steve, you were
Yes,
just talking about the USD NOK, about how you were going to look about taking a position if that follows what you were drawing there.
Okay. And then I said that RSI in the vast majority of the USD pairs is confirming that USD is strong, and even if it pulls back, we should see some more strength coming in, because we've been seeing the vast majority of the pairs hitting overbought levels. So even a pullback from here, I think, is going to give an opportunity to be buying the dollar. Now, if we have a look at some of the commodities, for example, if we have a look at crude, I think that it's very characteristic how strong crude has been, because the dollar has kept appreciating and crude seems to just be consolidating here. So I think another push to the upside, as we were talking about, at the 161.8 remains a very probable scenario. And in any case, as long as we remain above this 66.30 area, we have absolutely no reason to be looking on the short side. And having to do with the metals, gold has been moving lower, but still remains within the triangle, and this is something important we have to take into consideration. And same thing applies with silver. It's still within this long-term consolidation. So I think nothing much has changed in our outlook for those. Now, having to do with the USD yen, overnight, obviously, it was a non-event. I mean, the Bank of Japan was more or less a non-event. You can even see it from the price action. There's no question about it. So I'm monitoring this ascending channel for possible areas of resistance. We might push higher yet from here. The next area I see of importance is the 50% fib here at 109.70, and just above that we have the 200 DMA coming at 110.25. I think up to that point we might find some resistance. We might pull back from there. Depending on the nature of the pullback, we can then consider what we want to be doing, or if this move higher was actually some kind of a corrective move, or it was a new leg to the upside. I think the next few days should more or less shape that. Now, having to do with risk, having held the 200 DMA once again, we do remain in a triangle, but I have to say that the more time we spend consolidating without breaking the downside, the higher the chances that eventually we're going to be breaking to the upside. Okay, so I have to say that the more the days pass, the more constructive I become in decision risk, meaning that the less I would expect a breakdown, and the more likely I would find the possibility of a continuation to the upside. I'm not ready yet to fully commit and go in guns blazing long, but I've started establishing once again a long position in the SPX. My last attempt was stopped out at break even, but I'm looking to establish a position once again because I think that the reward to risk ratio is probably worth it up here. You can also see that the move lower in the DAX looks like to have been corrective. We seem to be attacking once again the 50% fib and the 200 EMA. Of course, for every time we're doing that, the less are the chances that that resistance is going to hold. So, you know, it wouldn't really surprise me if we penetrate through that and we at least go up to 12,900 to retest this horizontal support resistance area, which also coincides with the 61.8 fib. FTSE has been extremely strong. This has been a V-shaped recovery. Of course, pound weakness is assisting the recovery. There is no question about it. We were expecting a small pullback from there, but it was even smaller than we expected. I mean, it was like a couple of days of weakness, and that was it. Next area of resistance, it's the confluence of the 78.6 and you know, this horizontal area. It has acted as a resistance twice so far. It might act as a resistance another time. That comes at 7,590 roughly. So that might, you know, push back a little bit. But in all honesty, looking at this move and, you know, the recovery, I think that you know, the chances of a resumption to the upside, you know, have definitely increased by quite a lot, right? There's no question about it. Nasdaq is also holding this. You know, you can call it a triangle if you don't take into account this. You can call it an ascending channel. Definitely, it was some kind of a consolidation as well. As long as this, the 200 EMA and this bottom trend line are holding, I think, you know, that a resumption higher is also looking like a possibility. RSI seems to want to break higher as well. So as I said, I'm still remaining more or less neutral, but definitely for every day that passes, I'm becoming a little bit more constructive. You know, because if you remember, Dale, we said it since the first week that the indices started tanking at the end of January. We made it abundantly clear that, you know, our main scenario was that after a big sell-off, the bullish case would be for the indices to spend a long time consolidating and, in essence, working out the long-term overbought conditions in this manner. And, you know, so far this scenario seems to be the one that's manifesting here. Okay, I think more or less these were the things I had in mind to talk about, and let's have a look at the question box. I'm sure that we're going to get more ideas about what people want to see. Use the Swiss, yeah, absolutely. Here it is. Use the Swiss parabolic, breaking out from another confluence of resistances. This has been now the 9th day that it has been moving higher, and, you know, the next confluence of resistances I'm seeing here is this one, the ascending channels resistance and the horizontal level at parity, actually, right? Now, at some point, we're going to see some type of a pullback. I mean, this move has been completely parabolic. I mean, RSI has gone from being oversold at, you know, 22, 23. It has now penetrated through 80. But, you know, it remains strong, and, you know, the Euro USD, which is inversely correlated, might have more downside. There's no question about it. We have been breaching levels, and, you know, this is something we have to keep in mind. If we keep pushing higher, then we should start looking this 98.50 area that we were looking as possible resistance, as possible support. So if we manage to push higher, I would then be monitoring this area as an area of support instead of as an area of resistance, right? So, you know, it remains well bid. Now, would I advise anybody to buy it up here? Absolutely not. It makes no sense, right? But, you know, on the other hand, there is no sign that, you know, it's reversing as we speak. Could it be a false breakout? I don't think so, because, you know, this move has now proven its strength. I mean, it has broken above so many levels of importance that, you know, even if we look at the long-term chart here, it starts looking likely that this was a huge period of consolidation that it might be breaking to the upside. But we have to take it one day at a time, and important levels do matter. And when they don't matter, they show how strong or how weak something is. The same important levels that we sliced through on the way up, now that the pair has proved how strong it is, might easily act as very strong support areas when we finally start selling off. So as I said, this is why I would be looking for this 98.50 area to act as support, especially if we manage to to move a little bit higher first, because I want to be very honest. I don't think that at some point when we turn lower, this parabolic move to the upside would only yield like a 60 pip pullback, you know what I mean? But if we do manage to push to parity first, then a pullback to 98.50 would be a healthy pullback, and I would probably even be looking to buy that level if the pair behaves properly, when we get there, right? Because it's a matter of having a plan, but it's also a matter of seeing the market react in the way you would expect it to react when we actually do get to that level, right? I very often monitor specific levels to potentially buy or sell them, and sometimes I do, but sometimes I might see that price action is completely let's say conflicting in what I had in mind and what's happening, in which case I'll abandon the plan and say that, okay, this is the level I was looking for, but this is not the price action I was looking for when I was looking for the specific level. Now, having to do with another pair, the euro pound, I think Dale mentioned it. We also said that this potentially can be an inverted head and shoulders formation. What I don't like with this, not that it's a reason on its own to completely dismiss it, but I don't like the fact that we don't have much symmetry in the possibility of an inverted head and shoulders. I mean, the right shoulder has been quite shorter than the left shoulder, but regardless, somebody has to consider that this 088 area of resistance is an important one, because that would be the neckline of this inverted head and shoulders formation. It's also the 50% fib from the last move that started from the 89.70 area. So definitely a break above 88 is going to be a bullish development. You have to take it though with a pinch of salt, given the fact that all this is happening within a multi-month. I mean, it's now 7 months that we've been trapped within this slightly descending channel. So it is a bullish development if we actually manage to close on a daily basis above 0.88, but considering also the fact that we are in the middle of a descending channel, you have to take it a little bit with a pinch of salt. I mean, not make like long-term plans, right? Let me see what else people want to have a look at. Hi, Steve. Nice calls this week. What's your view on USDMXN? Yes, absolutely. Let's have a look at the USDMXN. USDMXN actually was a little bit the canary in the coal mine. It's one of the first that made an important move. I mean, out of this descending wedge. I think that so far the move lower looks like it's corrective, right? Especially given the strength that we've been seeing, that adds fuel to that. I'm even going to dismiss that week and say that this looks like a pennant to me, might end up being like a bull flag. Regardless, I do think that another leg to the upside to at least come and test this 1930 resistance area is quite important, or at the very minimum this 61.8 once again. So I do think that the market participants are going to be looking to buy pullbacks in the USDMXN, especially given the recent strength. So I think that in the near term we have to remain constructive after this breakout. CAD-yen, let's have a look at it. CAD-yen, I have to say that it has been the past few days one of the most slow movers in the yen pairs. I mean, I was monitoring this ascending channel as a possible corrective channel, and it's still a very, very valid scenario, because you can see that the move to the downside was 100% impulsive in nature. You can even count 5 waves on the daily chart, without having to zoom in. But is this correction over? Likely not. And why am I saying this? Because the more the days pass, the more this looks like a triangle to me. In which case, why not another push to the upside within the channel to come and test this 61.8, also the 200 DMA is there, before failing, right? So I do think that chances for another push higher before weakness weakness reestablishing itself is quite likely. But definitely I wouldn't be doing something with it right here, right now, right? If I had to have a position in the near term, it would definitely be long. So if I had to buy or sell it to hold just for a few days, I would be buying it. But that's only a very near-term view. Okay, USD ZAR. We have another question about it. Let's have a look at it. USD has broken above this confluence of resistances. Why not? This has been a very strong move to the downside. Why not even push higher towards the 38.2, even the 200 DMA at 1280, right? So I don't have evidence that this move higher has finished here. Okay. Now, yeah, Dale.
Oh, excuse me, Steve. I was just having digestive problems.
Okay, mate.
I didn't know my mic.
I thought you wanted to say something.
Yeah. Oh, by the way, no guests today, so you take it till the close, bro.
Okay. Hi, Steve. If you sell euro yen, I've already sold euro yen, as I said. What my target is actually 129, mate. My target is 129. Okay. So let's have a fast look at a few more exotic currencies. USD, Turkish lira. I think this looks like a consolidation, but I do take into account this ascending trend line. So perhaps if we actually push below it, we might see like a stronger correction. But don't forget that this has been a very, very strong uptrend, so you shouldn't dismiss that fact. I'm still long the USD ruble. I'm very comfortably in the money. My cost average is at 61.25. So I'm looking for more upside here as well. USD Singaporean dollar, major breakout. I think this is something to notice as well. USD Chinese yuan seems to also be breaking above here. I would be very closely monitoring this 639 level. I think that if we break above it, we can see a stronger correction unfold from here as well. So USD looks good. We said several days ago, looks good, especially against commodity currencies and exotics, right? Of course, pound included now. I mean, pound has been decimated, especially after we go today. This for those that haven't seen, I mean, the reason for seeing more weakness today has been a revised GDP print to a much softer than expected. So definitely that created some more weakness. And as I said, we've been breaking major levels now, and definitely the pound is it is to be sold at any given opportunity. And something, I know that many people don't want to chase, which is the right thing to do, not to want to chase. But I will tell you something on the other hand, right? This is the weekly chart of the cable. If you remember, I kept saying and repeating, and Dale, you have to remember this, how important this is to keep in mind that this move higher at some point would end. Why? Because it's more than obvious that this channeled move higher was a corrective move. So we had no evidence that this corrective move was about to end.
Sound stopped again, buddy.
And you know, as long as we kept printing now.
Yeah, you're okay now.
Dale.
Yes,
okay.
you're okay.
I ran extensive tests the last few days with Velo as well. It's
Maybe it's GoToMeeting.
100% sure that it's not my microphone, you know, because we've tested. Also not my connection, because I ran extensive stability tests on my connection as well. So it's something to do, I mean, in combination with GoToWebinar, but I really don't know what to do because it's not my connection, it's not my microphone. So it's something that has to do with the program, but I don't know. I mean, I can't troubleshoot the program itself, you know what I mean? So we have to live with it. Perhaps, you know, after another update of the program, this problem as it came, as it started happening, you know, without any warning, it might go away without any warning. Now, Dale, you remember how often we were talking about that on the medium to long term, the cable was in a corrective move higher and eventually that move would fail. And when that happened, we would see much lower prices, right? So yeah. Last week, we got a very strong signal. It was an outside black candle. And this week we're seeing very strong continuation, and as it seems, we're also going to see a weekly close that's going to print a lower low. So, you know, obviously this ascending channel is still holding, but I have to say that these are some first signals that, you know, the cable might be rolling over once again. And, you know, if that's the case, there should be a lot more downside for the cable. So to begin with, what we can be doing from this point on is looking at levels to be selling. For example, I would be looking, let's say, for a retest of the 138 area as a good opportunity to sell. I was looking for 141. Yesterday, we came 90 pips close to that, but then we failed. So unfortunately, I didn't manage to sell that. But, you know, 138 should be an area of resistance. I think that even if the move to the upside is to resume for the cable, seeing the weakness we've been seeing, we should see at least one more leg to the downside. So looking for opportunities to sell in the short term and hoping that this was actually a long-term rejection, and knowing that, you know, we are in the right side of the market having to do with the long-term view of the chart is always a good thing, right? So, you know, I will be looking to sell the cable with some short-term targets, and if the move to the downside keeps unfolding with momentum, even better. Let me see if pound Swiss. Yeah, we have a question about pound Swiss. Pound Swiss actually is a beast. Has been a beast lately. Okay, you know, we've had some overshoot of this. I was looking of this ascending channel here. You know, this was a very strong move to the upside, and now we seem to be breaking below it. But I wouldn't dismiss yet the fact that this can end up being a consolidation. Of course, for that to happen, we would need the Swiss franc to weaken, to keep on weakening. So in essence, for the Swiss franc to be counteracting pound's weakness, right? So if that doesn't happen, this might prove to be a false break to the upside from this ascending channel. And once again, if you zoom out, you can also potentially see that this was the impulsive move lower and this a long-term correction to the upside, right? So, you know, if this proves to be a false breakout, there is the potential for a lot of the downside there as well. As you see, the structure is not that much different than we were seeing in the cable. I mean, it's more or less the same kind of concept, right? Yep. Okay, a question about the Euro Kiwi. Here's the Euro Kiwi showing some weakness, currently testing an area of resistance and support. If we hold here, we definitely remain bullish, right? So if we hold this area of support, we remain bullish. Another push to the upside is likely. Now, if we fail below it, we're again in, you know, this was a false break to the upside, fine, but we're again in no man's land because simply this area of resistance and this area of support have proved how important they are. So in my opinion, anything within these zones is simply noise, right?
Let me pretend to be an Elliotician. let me just pretend, okay? The high in November, ABC, down to the beginning of the year, A.
Yes,
Down to the,
B,
okay, and then
and another
B,
C.
yeah, yeah.
Yeah, it is very likely. It is very, very likely.
Just a guess, you know, I'm a professional guesser.
It is very likely. And you know something, Dale, there is one thing for sure, right? Euro Kiwi has been very, very strong, but let's take this low that you mentioned here, the low that we had in the first days of.
Yeah. Went quiet again. I believe Steve is saying it's overlapping and choppy and definitely not impulsive. I'm guessing.
The year. So the question is the following. Yeah, can you hear me?
Yes, got you back now,
Dale?
Steve. I'm guessing that you're saying that
Okay.
that whole move was, you know, corrective, overlapping, not impulsive.
Yeah, so can easily be an A, B, C, as you're saying, right? In which case, yeah, lower is quite likely. We've held now the 78.6. So if we do break below 171.10, another move to at least down to this area is very, very likely. And as you said, it's also very likely that this will prove, you know, to be an ABC. It can also prove to be other kinds of, you know, of a correction, and it might not even break the lows. I mean, a irregular correction or whatever. But what remains to be the case is that, yes, the move to the upside was definitely not impulsive. So, you know, being outright long, we can do that, and it might push towards the highs. It is a possibility. But, you know, there is some significant lack of momentum if we look at it in the medium term, because let's be honest, in the short term, we had many consecutive days to the upside. So, you know, that's a given. So as I said, if we manage to hold this short-term area of support, fine. I mean, I can't turn, you know, bearish. But on the other hand, am I long? No, I'm not long, and I'm not looking to be long. If you remember, I was actually looking to be short, and I took some profits from my short here. I took profits on my first half and almost stopped out at break even. I took very little profits on my second half. So it was not accidental that I was looking to be short the Euro Kiwi instead of long, but I'm now more or less neutral, right? Nifty, okay, we have a question about the Nifty, and I think we can then wrap the week, and you know, whatever else, we can also discuss it in the chat room. Nifty is breaking above this horizontal area of support or resistance. I had said how important this is. Currently testing the 61.8. I have to say that especially if it closes above the 61.8, it's going to be looking quite good. It's going to be looking like a possible resumption to new highs, right? So I think Nifty is looking better and better by the day.
Great look,
okay,
Steve, and every day.
Thank you very much, Dale, and everybody have a lovely weekend. I think that this ended up being a very interesting week, especially for FX. And you know, let's hope that we will resume having some volatility in FX, because we spent several weeks having almost no volatility, which is never a good thing. And you know, because strong moves give very good levels, and strong moves usually help technical trading perform much better.
I agree, and here's my last recommendation, Steve. We're sitting here near the end of April. My recommendation is to take at least a 3-month subscription with ForexAnalytix to make hay during the spring and summer before the dog days of summer starting in August. So let's make some hay together, 3 months, and then, you know what, take August off. You know, process how ForexAnalytix was either an edge for you or you don't need it. And then we'll get fast and furious again in the fall in September. And it'll also be football season. So that's my recommendation to end a great week of hanging out with you and the team. You know, had some great interviews this week. Next week, keep your fingers crossed. I'm hoping to get Jim Rickards in here. Most of his reputation precedes him. He's the kind of the thesis author from his book, The Currency Wars. So enjoy your weekend, everybody. Great day to sign up, get familiar with the platform. In fact, it's a great time to sign up because we'll be coming off beta with, you know, I've seen this new app and the updated website, and you know, these guys are making a Ferrari. So get in the car, get in the Ferrari, and drive our traffic light page for 90 days. Because you know what? I don't care if it's a money manager or a signal service or anything. You really need a quarter, 90 days, before you could really make an assessment of value, in my opinion. You have to give people a chance for 90 days and not just be short-sighted, well, what did you do for me today? It's just like trading. Don't look at your trading on, you know, every day as it being life or death. You know, take a look at your trading every quarter and review the things that you're doing right and the things that you're doing wrong. And I think becoming a subscriber is something that will aid you. That's why I'm here. So, okay, everyone, have a great weekend. Remember, don't just count your pips, count your blessings. And I think we're all blessed to have the support of a community and a free webinar for people that aren't subscribers to come in here and find their edge and face. So with that being said, take it easy. Adios. Brian likes the spirit here. Tom, you're very welcome. You too, Kareem. You too, Stalin. Say hi to Hitler for me. Brian, yeah, thanks. All right, everyone. Have a great weekend. You're very welcome, Claudine. It's our mission to build up and edify traders every day. I'm addicted to Twitter, John. Yeah. I go to a Twitter anonymous meeting every week. I go in there and go, hi, my name's Dale, and I'm a Twitterholic. And then everyone goes, hi, Dale. And then I tell the story of how I just wanted to tweet, and now I talk about how I can't I can't stop myself. All right. See you guys and gals. Have a great weekend. Weekend's a great time to lay out your strategy for next week. Your best trades are made and cut up and constructed on the kitchen table. That's from an old timer. I used to do my paper charts on the kitchen table. Adios. Thank you, Claudine.